Hey guys, and welcome to today's episode of Simple Crypto. I'm happy you are all back and all the new subscribers, all the new followers on my channel. Very welcome here. I hope you enjoy this show today. Today I will speak about the very urgent, important topic that the whole crypto scene has been speaking about during the last weeks, and I will explain to you why this tokenomics question that has been coming up recently is a huge problem that we could see in the future. So let's move right into it. Where is it here? Let's check it out. Yeah, is the bull market doomed? That's the question that I was asking when I looked at this, and certainly we are facing some fundamental problems here. It all started with Victor, the DeFi villain, or it didn't start, but it got a lot of attention when he posted this post here on X. It says that WorldCoin is not even included, but the 24 coins, the coins that launched this year, have a really unbelievably bad ratio between market cap and fully diluted valuation. What does that mean? That means that the market cap, so the total value of the circulating tokens at this point in time, is extremely low compared to the market cap it will have in the future, because all of the tokens that will be unlocked at some point. And currently, on average, the coins that have been launching this year have only a ratio of 12.8%. I guess during the last 1.5 months, this has increased slightly, depending on how many coins launch. Perhaps it could have even gone down if there launched a lot of projects recently. This resulted in this post from him, and then Binance Research took that topic up, and on the 17th of May they posted this here and published their low float and high FDV report. And this is when the topic finally got the attention that it really deserves. And this also is the base of what I will present you today. So let's move to this Binance report here. Low float, high FDV. So low float means that a little amount of tokens is only in circulation. High FDV, so fully diluted valuation of the cryptocurrency we are speaking of, is extremely high. And that means that here are some takeaways, key takeaways. I marked some points here which are very important for you. So it means that these projects have a very high total valuation when they launch and very low circulating supply. It also means, and this is what makes it extremely dangerous for the whole market, that during the next years, they say from 2024 to 2030, approximately 155 billion worth of US dollar in tokens will be added to supply. So this is inflation, and without a corresponding increase in the buy side demand and the capital flows, the substantial amount of token coming onto the market poses selling pressure. And what does that mean? That means that it has to be at least 155 billion new capital buying up these tokens that are flooding the market with the inflation from these projects. And when this happens, when 155 billion US dollar of fresh capital is buying these tokens, then the price of your token stays basically stable. So imagine you have a token that is worth $1 today. the inflation needs to be bought up first just to keep it at this $1. Every growth, so if you want that this token is increasing in value, or most people are here for making money, right? They believe in the project, they invest, and they want that project to grow and the price to grow, but to keep the price only stable, this money is needed. So every money on top of this is what leads to growth. However, this is already a big amount of money. Put it in relation to the crypto market. Solana is the 4th biggest currency by market cap, and that's more than double the size of Solana. So just to know what dimension we are talking here about. It's very important what they state here as well for investors to be selective, to check what project you're investing in, because this money won't be distributed equal towards the projects. Some of them will never reach their share, and this means that the token price will completely collapse. On the other hand, you will have projects which see relatively to their size a huge inflow of money. And in this case, these projects can still pump. So be careful what you invest in. I said that in some tweets, I said this in some videos earlier. I deeply believe that altcoin season is a legend of the past. There won't be, and this is one of the big reasons for this, there won't be any altcoin season any longer. There will only be theme seasons, like probably AI. There is an AI season, then there are DeFi seasons maybe, but there is no general altcoin season any longer because of this vast amount of tokens existing and the huge amount of capital needed to pump the market as a whole. So this is to keep in mind. What does it mean? I said that already. The ratio between the current market capitalization and the fully diluted value is very, very bad. We see this here in a graphic as well. So, over the next couple of years, they even say that this 80 billion that is needed to compensate for this. And compensating means, again, just that the price of the tokens don't collapse, they stay stable. So if you want the price to grow, you need something, much more capital to do that. And it has become worse. So you see here that 2022 tokens, 2023 tokens, and the 24 tokens, they have the by far worst ratio yet. Obviously, we need to note here that these tokens are new. I'm not sure how they... if they measure this from launch or if they measure this actually, I read it before, but I'm not sure if they mentioned this, if they measure it right now or if they measure it from the point of the launch. So this is, so the older tokens have a better ratio, obviously. Then we see here very, very bad numbers by, for example, Stark or ZK. ZK is not ZK Sync. This is the other ZK, the polyhedra network, which is currently having this conflict and getting a lot of hate because they took this ZK ticker, which should have become the one for ZK Sync. And I think ZK Sync will still take this ticker, so there will be 2 tokens with the same ticker. What you see here down is Stark had 27 billion valuation at the top, and 27 is it's a lot. It's just behind. It's top 10 for a project that just launched. But one thing that Binance also mentions here to keep in mind that the fully diluted value is not everything. There are also other measurements that I will talk in other videos. So I will create more and more videos now to also speak about this. There is total value locked, which is a completely different metric, which applies particularly for protocols which have the ability to lock up money. And also revenue is a point, right? It doesn't mean that projects with a high or low FDV have, it doesn't categorize them how much money they make with their protocol, right? Then, yeah, I marked here as well. Meme coins. Meme coins have been here as an example. They have been very popular, and I'm criticizing that often, that meme coins are popular despite our industry building great things, which means that the greatest thing we have to offer apparently are useless tokens with a great logo. Yeah. But meme coins have one big benefit. Usually at launch, they have fully unlocked supply, and they mentioned this here, that for the holder, there's no further dilution in meme coins. Rather, they usually have some taxes for selling and stuff. So the supply should get even lower, and they're deflationary by design mostly. So yeah, meme coins as a great example. Once it's a good example here for good tokenomics. Then we have how did we get there? Binance is asking this question, and what we see here, I made some arrows here on this presentation. So the first arrow says that end of 21 was actually the peak of the last bull market. And you see here 2018, quarter one, 2017. This is, the VCs are usually a bit, they're starting to pump the market, and then they keep putting money in as long as the music is playing, basically. So you see here also in quarter one, 22, when the market was already going down, was dumping, they still put in high amounts of money. And then I made a second arrow here. When you think of these projects that got money from VCs, late 21, early 22, their TGE might not have been before 23, probably quarter two. And then these VCs, the big players and the whales and the private investors, they usually have a vesting period with a cliff. That means they need to wait for at least 1 year probably until they get the first tokens. And that's where my third arrow is. So yeah, probably early this year, projects that got VC money there, they started to get tokens even only then. So yeah, what does that mean? The more money flows in, the higher the valuations get, and it's moving towards very aggressive valuations, as you see here. So VCs are increasingly willing to write checks at higher and higher valuations, because the whole market, when you look at CoinGecko or CoinMarketCap, you see how projects are valued at higher and higher prices. So it makes sense, like on the stock market, that this average valuation is an indicator of what another project will achieve. So the higher these valuations go, the higher the checks are that they write. And as I said before, as long as the music is not stopping, as long as the music is playing, they will boost valuations. And it's like a circle. They will go higher and higher, as we saw it in 21, 22, and also 2017, 2018, which was like the first crypto cycle where substantial, pretty small, but still recognizable amounts of VC money got into the space from the early pioneers of VCs. So yeah, that means that the price that the private investors and VCs buy at is getting higher and higher. It also means that they are motivated to boost these prices even higher, and that at the launch, at the public launch, when everybody can buy this token, the price, the fully diluted value is already insanely high. Here some more details from this Binance report. If you want to read this, I really recommend just Google low float and high FTV by Binance. It's a very good and easy read. And now let me get to the second part of this episode. Yes, so let's move on to if you have bought one of these high FTV coins, you could have in the past already ended up there where this guy ended up, and like hide the pain, Harold, hiding the pain, and just becoming a community member of a certain project. And that's what they do. They put out lots of marketing at the point when the token is released to the public to push the price to new heights. And then many people FOMO in, they buy into this token as a high price for a quick flip, like they want to buy it and sell it for the double price again. But eventually the token dumps, and those people who have bought for a high price, they end up as community members. And for the next 2, 3, 4, 5 years, they are hoping that their token will ever go up again to this value where it was before and exceed it. For good projects, that's certainly possible. It's just that you cannot do a quick flip, but it's certainly possible that these great projects go even higher, and then you just need to wait the time. So if you analyze projects by their fundamentals and you really believe that this is a great project to be in and to support, then obviously don't stay back because of the tokenomics. But also keep in mind that you can always check out the vesting schedule and that you look at better points to buy, because sometimes tokens can get cheaper, right? There is a good advice from my side. Go to CoinGecko and customize your feed of tokens. Customize the price feed. Activate the fully diluted valuation, and also activate the market cap related to the fully diluted valuations, which is, I will show you now. You don't have to go to CoinGecko right now, but I will show you here. Which is certainly something that you should keep an eye on. So very, very bad, and probably the worst of all is WorldCoin. It has only 2% of the amount, the total amount of coins floating. So very low float, and it has a market cap of 46 billion fully diluted. So 46 billion fully diluted is more than half of Solana, while it's WorldCoin. It's not Solana, right? So this is the worst example. We have currently new tokens like Ethena. Ethena has about 10% on the market. Starknet, both of them would be in the top 10 with their fully diluted valuation. And then we have others like Celestia. For Celestia, I will show you something more just in a moment. And then very, very bad example also, Arbitrum. Arbitrum, meanwhile, has 27% floating. However, if you're interested in Arbitrum, I created a video. I will put it up here just some months ago, where I talked, I think it's already a year ago. No, I can't remember, but I created a video on the Arbitrum tokenomics where you will see clearly what the problem is. So watch that if you're interested in more details on the Arbitrum tokenomics. I argued there why Arbitrum needs to drop from the double price as it is right now, and it did exactly what I predicted, and it was pretty obvious due to the token unlocks happening. And then we have good examples. We have, for instance, here BNB, we have GMX and Chromia, which are projects that all have 100% of their tokens on the market. In case of BNB, they are burning every quarter, so they are getting less and less. Fully diluted is now 92 billion. And we have GMX, for instance, here with also with all the tokens on the market, and Chromia. So good examples here. And this last example, I brought up Bitcoin. For Bitcoin, there are roughly 6% of the supply missing. So you see also Bitcoin still has inflation. As you might know, block rewards are reducing, but Bitcoin will have small inflation all the way until 2140, we believe. So yeah, that's about it from this. But I have some more examples here for you. There are exceptions. And Phantom here is an exception. For instance, be careful with this number, because for Phantom, all the tokens are also in circulation. It's just that they have burned, like Phantom is burning tokens or coins. It's a layer one, so they burn the coins all the time. So this number is getting actually lower, while yeah, it's a measurement question by CoinGecko. So here you need to be careful. It doesn't count for all the coins. Tether is another example here. Tether has always won. Obviously, all the Tether in circulation is all the Tether existing, but they have the feature to mint more US dollar Tether, so it's not 100%. Yeah, it's not a good measurement for this either. And the third example for an exception is Cosmos here, because Cosmos has inflation. It has constant inflation forever. That means that it's also always one as Tether basically, but here the protocol is minting, and for Tether it's the Tether corporation that means the money that is paid in the system basically. And yeah, as I said before, I'm coming back to Celestia. Here's a great example. You see the vesting schedule of Celestia. And the TIA token or TIA coin, it will have a huge increase in supply at a point at the 31st of October this year. So until 31st of October, the supply is same. That means nothing should happen the whole summer here. It's easy to say, great project, put my money in, right? Not totally. Be careful there as well, because I said it in the efficient market hypothesis in my last videos, that you always need to think that the market is starting to price in events. And here it could very much be that the months before this happening, maybe in the summer, we already see a negative price impact on TIA, because everybody knows that this event will happen in the future. On the other hand, I promise you, we will see a lot of marketing from TIA. We will see a lot of support for the token price from those who get the tokens here. So it could play both ways. However, when these tokens are unlocked, Celestia will jump in market cap, and to compensate that, there needs to be a huge amount of fresh capital going into this project. Nevertheless, one important note here as well, I think Celestia is an amazing project, like many other projects which have launched with low floating amounts of tokens. This is nothing against Celestia, it's just objectively saying what tokenomics can do to the price of a coin or a token. Celestia might face a tough time in keeping up price for 1.5 years until it reaches this, like where we have this steep rise, continued rise in token supply. It could be for great project compensated a big amount, but be careful with this. Yeah, quickly summarizing here, what I show you here is the total free. This is the market cap of all cryptocurrencies, excluding Bitcoin and Ethereum. And this one, with the 155 billion that we have been speaking about from the Binance research report, this means that the market cap of these currencies will grow by roughly 25% only by the inflation. And this means at this point, the prices stay stable while the market cap in this graph is rising. So to make token prices go up, we need much more than this. And yeah, I said it before already, here one more time. My other video on the dirty tokenomics of Arbitrum, can recommend to watch this. And one thing in my own interest, I'm happy that you all are here and I'm getting comments now. I'm getting this guy in the comments already that says I'm totally wrong and circulating supply is not the same as the existing Bitcoins. Please tell me what you mean. I'm very welcoming you down in the comments below to tell me what you mean with this. I think I made it pretty clear in my video what I mean, and I don't think that you have a good point in claiming that's totally wrong. We can discuss about the terms that are used. And one more thing, if you haven't subscribed to my channel, please help me out. I'm showing you here the graphic of the from my YouTube channel. It's 96% who watched my recent videos who did not subscribe to my channel yet. So please, if you want to see more of this, support my channel, help me out to grow and to be motivated to bring you more content like this. If you liked it, please also hit the like button and turn on the notification bell to not miss any episodes. And this being said, I hope you enjoyed this and I wish you a wonderful rest of the day, wonderful evening whenever you watch this, and see you soon. Your RX.